Welcome to This Week, Next Week, Group M's podcast. I am Kate Scott Dawkins.
I'm Jeff Foster.
So I can't quite remember a busier week in recent memory in terms of earnings, plus our forecast season where we're reviewing growth for 60 plus markets around the world, plus all the level of news. How's everyone doing?
Yeah, it's definitely a busy stretch right now between earnings, between compiling data for our report, and then all the economic news. It's definitely the days are flying by.
Yeah, you know how I gauge my busyness is I'm obsessed with puzzles and games. I love them. I think it's why I enjoy doing this job, even though it's so crazy. And so every day I have my routine. I have my New York Times Games app, and I will do the Wordle and connections and crossword and everything else. And I can tell if I've gotten to bedtime and I have not done any of those. I can usually find a few spare moments in my day to at least do Wordle early on. And I realized I had not done any of them until I got into bed last night. I thought, oh dear, that's busy.
Yeah, that's always the sign. Similar for me too. Just kind of checking sports scores and the news for the local teams, and all of a sudden I realize, wow, I haven't even looked at anything, and it's about 11 o'clock at night.
Yeah, that is very much the name of the game this week. Let's do a quick round robin, sort of a vibe check for where we are given all the results this week. Plus economic news, right? I think the good news was that the U.S. was still hiring. We have seen that. We did see a hit to GDP, I think really with the pull forward of imports, trying to run ahead of tariffs. And then on the sort of flip side, we had a lot of cautionary notes from companies talking about the impact that expected tariffs are going to have. Things like Procter & Gamble said that they were expecting $1 to $1.5 billion costs from tariffs. Annually, Amazon warned of hits to profits in future quarters. Apple warned that tariffs will increase costs by $900 million this quarter ending in June. How are people feeling on the ground? Like, Jeff, are you noticing things getting more expensive when you head to the supermarket, or?
Yeah, that's a good question. The simple answer is yes, with some caveats that, this being New York City and prices are already elevated to begin with, plus all of the inflation from the last few years. So it's really hard to pinpoint, what exactly the cause is. Maybe prices would have been rising anyway. So I think it's a little too early to tell, but definitely picking up on, little things like when you go to buy a coffee, even from like a street cart or, lunch at a fast food restaurant, you're definitely seeing, some elevated prices than just even like a year ago or even a few months ago.
Well, let's get into all of the fun from the last 2 weeks, because we didn't have a podcast last week. I was actually in New York with Jeff, having meetings with clients and our colleagues across Group M. So we're going to catch up on a couple that reported last week as well, alongside the mountain of earnings that came this week. So we have Meta, Comcast, Google, Snap and Spotify, Amazon, Microsoft, and Apple. It's just a couple. It's fine.
Yeah, just a few.
Yeah. Should we kick off with Meta?
Sure, sounds good.
So I think unsurprisingly, rather, given there were announcements earlier in the week about Meta launching a standalone AI app, a lot of the call revolved around AI, both in how it was going to power future revenue streams, but also really heavily around how they were using it to further monetize and improve their ads business, which is really the primary business of Meta. What were your sort of overall takeaways from the call, Jeff?
Yeah, lots and lots of AI talk as expected. Personally, I thought it was very interesting. A lot of the the talk about the Ray-Ban partnership. So that was interesting to hear, a little bit more details on that. I think a few other things that kind of jumped out were some of the commentary on the de minimis exemptions and how that's going to impact things. And then I think the other interesting thing was the CapEx talk that, looks like full steam ahead. So I thought those were some of the interesting takeaways.
Yeah, that alongside Amazon saying that they were using capacity as soon as they could, you know, open it up was, I think, astounding. So we're definitely seeing that usage continue at pace this year. Yeah, I thought a couple of things from Meta. Obviously, they talked a lot about optimizing ads. They're going to start introducing ads on threads. They spoke about how that and then future use of ads within the AI standalone app would follow their typical progression of getting scale first and then worrying about monetizing. We did see in terms of overall numbers, revenue was up 16% with advertising growth up 20% in constant currency to just over 41 billion. And we had US and Canada revenue by user geography up 18%. Just topped by rest of world growth of 19%, and then Europe and Asia after that. Pretty strong numbers really for Q1, showing a continuing growth from Q4 of last year into Q1 of this year. The other thing I thought was interesting when we got into questions was some of the risk they spoke about in terms of the European Commission decision. So the notice that what Meta had laid out as a proposal or started in terms of offering a subscription with the option to then opt out of personalized ads, that was not in keeping with DMA. And they mentioned that there was a 16% of revenue then because of the Euro area, 16% of revenue at risk of impact due to the European Commission decision. So I think we'll hear more about that as the year goes on as well.
Yeah, no, I agree. And I think from, our standpoint of being in the forecasting business, it was fascinating to hear some of the additional color on some of the verticals, how they said that, just getting an idea of how the uncertainty was going to impact different parts of the advertising business. So I thought those were, some good insights to think as we think about what this upcoming year is going to look like.
There definitely weren't notes of panic. I don't think across any of the media owners we're going to discuss today. And some of that may also be because we're at a pause, right? At least in terms of the broadest tariffs on other markets other than China. Definitely the de minimis exemption. We're recording this on Friday, May 2nd. And so that came into effect today. We'll get into a little bit more about Amazon going forward. But they did, of course, note some impact to the Asia-based overseas advertisers. They did say that there was a pullback in the US and that was somewhat, I think the message was that was somewhat a shift into other markets, but not fully mitigated. So not all of that shift was coming back into other markets, although some was.
Right, right. And it was similar commentary to sort of what we had been hearing about Google with some of the Asian advertisers cutting back spend, almost to a trickle. So it's interesting to hear that we're, beginning to get a pretty good picture of how this is going to start to impact things.
Yep. We also had a couple of the other large digital ad sellers this week, results from Snap and Spotify. I view Snap results as sort of mixed, I guess. Their advertising was up 9%. They've done a great job, I think, of diversifying their advertiser pool of customers. This is something they've been specifically going after. They said total active advertisers grew by 60% year over year in Q1. They've been really focused on this self-service, trying to make it easy and attract that same pool of advertisers that has really led to Meta's and Google's growth over the last several years. On the other hand, daily active users in North America and Europe were pretty stagnant, with revenue growth coming from rest of world. They're talking about reducing operating expense at this stage. There's not a lot of fat to trim in terms of their advertising expenses. The company spent just 1% of revenue on advertising in 2024, significantly below other media and entertainment companies. I think it's hard to climb out of a sort of second tier ad buy mentality for planners without that investment in growth and user growth and excitement and all of that. What's your
Yeah,
take, Jeff?
I know I agree completely. Is very, I mean, my view as well, very mixed for Snap, but it's just a question of like where do they go from here? And as you mentioned, it's just if you're not spending that much on the advertising part, where do you cut from? What's the path forward through growth of sort of elevating into that more premium level of sort of social media. So I think they're at an interesting point right now.
Yeah. Spotify as well. Constant currency advertising up 5%, following a trend of deceleration, really, and down significantly from the 19% growth they saw in Q1 of 24. Premium revenue growth has held up better, with Q1 revenue still up 16% in constant currency, which is a much more modest deceleration from 21%. Where it was in Q1 of 24. So they've talked about expanding the Spotify Ad Exchange partnerships beyond the trade desk to include leading DSPs and partners like Google and LiveRamp. What's your take on that sort of trend and slowdown there versus some of the other, at least in the first quarter, the other digital giants that seem to be holding up that pace a little bit better?
Yeah, I mean, I think, might be sort of expected, at least for me. I can't say I'm very shocked at any of these results. But I think also with Q1 being a little bit of a slower period, I think, it'll be interesting to see how this plays out the next quarter or two, and especially as their video podcast strategy continues to evolve. I think that could potentially really turbocharge ad sales and revenue growth from that side.
Yeah. They're definitely interested in, we've spoken about this before, pulling themselves out of an audio consideration into a broader video or digital consideration.
Right, right.
Whether planners and advertisers see that the same way is, its own question.
To be seen. And I would assume, the amount of money you have to spend on content, even if you're getting some more high profile podcasts, is still going to be relatively more cost effective than paying all the music rights.
Yeah, well, we'll see. It was 10 billion or something,
Yeah.
right, last year?
Yeah.
So all the producers are just the music rights, I think, actually.
Yeah,
So yeah, it's a good chunk.
Yeah.
Now, Spotify obviously has a subscription model. That's the premium revenue, as well as the free ad-supported tier. This is relevant because I think I mentioned on the podcast before, as part of June's This Year, Next Year forecast, we reran a survey that we did with experts across the industry 5 years ago in 2020, where we asked them to help us predict sort of the future of media advertising and tech in 2030. So back then it was a 10-year look ahead. We've rerun it now, still with a 2030 sort of timeline. So now it's a 5-year look ahead. And the premise is we got nearly 60 industry experts around the world to tell us how likely they thought a set of given scenarios were. We're not going to give all the results today. You're just going to have to wait for This Year, Next Year in June to see the full thing. But I thought if you wanted a little sneak peek, we could talk about a couple of the early results and findings today, if that sounds good.
Yeah, let's do it.
All right. So the subscription model piece, we asked our nearly 60 industry experts whether they thought most, so more than 50%, most products and services will be purchased via a subscription in 2030. What would you say? We'll start with you, Jeff. So what would you say, with 1 being highly unlikely and 10 being highly likely? Where do we fall in terms of most things being bought by a subscription?
Okay, I'm going to kind of go the middle of the road, but a little higher. I'm going to say a 6.
Okay. So, yeah, I think that's pretty good. Now, 2/3 actually think this is unlikely. So they're slightly on the other side of this. But there are a few dissenters. 14% of respondents actually thought it was highly likely. So up in the sort of 9-10 range. One person mentioned how cars now come with subscriptions for added features like remote unlock, and how it might make things easier for consumers. So those are some of the comments that came alongside. Well, maybe that could be possible, but most people, I think, given the spread between, again, sort of OECD markets and developing markets and the daily purchases, that was still going to be a little bit unlikely.
Right.
But fascinating.
Yeah, very much so.
All right, let's kick it over to Comcast. That was last week again, but since we didn't have a pod, we're going to cover an overview today.
Yeah, so we can just discuss getting into the high level findings from Comcast. So their total revenue saw a slight decrease, about 0.6% year over year, coming in about 29.9 billion. So the big stories were broadband losses worsened for Comcast, tripling year over year with the decrease of 183,000 residential customers. Video losses continued at 427,000, which was actually a slight improvement, ending the quarter at 12.1 million. Wireless growth was a strong point. They added the most lines in 2 years, reaching about 8.15 million. And then when you look at the advertising, their domestic advertising revenue experienced a pretty sharp 7% drop, but came in at about 1.9 billion. And of course, some of this had to do with some timing on the sports side. They had one fewer playoff game for the NFL, so that factored into it. And then looking at Peacock, which gets a lot of attention, Peacock's revenue increased 16% to 1.2 billion, and subscriber levels jumped up to 41 million. But as we discussed the other days, the subscriber growth was driven by a distribution deal with Charter Communications. A little bit of nuance in some of these numbers, but still, pretty strong to see. And then on the profit and loss side, that Peacock narrowed its loss to 215 million versus 639 million last year. So it's on its slow march towards profitability, or at least break even.
One thing on Peacock to point out is the sort of difference between the overall revenue growth of 16% and advertising growth of just 2.5%. So pretty different rates there. Definitely subscription revenue pulling that up. And we'll see whether the ad revenue growth picks up in future quarters.
Yeah, and listening to the commentary, obviously with that NBA coming online and the end of the year, they've expressed a lot of optimism about that, and I agree. I think the NBA, the playoffs have been doing pretty well on the ratings side, so I think there's a lot to look forward to. There's a lot to be positive about.
It was a pretty tough comparable in
Yeah.
Q1 of 24. That was 33% growth.
Exactly.
We'll give them that one. Fair enough.
Right.
All right. Should we go back to the digital side of the house? We can touch on Amazon, Google, Microsoft, Apple, a few of those folks.
Sure. Let's do it.
We'll run through some of these briefly because, again, it was just a super busy week. Amazon advertising was up 19% in constant currency, really still at the top of the league table alongside Meta and then Microsoft and Google. They did mention the impact to profits coming from tariffs, but really pretty strong advertising results there still, and a pretty, I think, good outlook for most of the rest of the year. Google advertising up 7% as reported, or likely closer to 9% in constant currency terms. Search topped 50 billion. YouTube was up 10%, as was search as reported, and YouTube was up to 8.9 billion. And then Google Network revenue saw its 11th consecutive quarter of decline as Google really, I think, refocuses on its owned and operated properties. And then also over the last 2 weeks, we had news that Google scrapped its plans to end third-party cookies on Chrome. There's a lot going on in that space right now, as the company's ownership of that asset is potentially being looked at as one of the suggested remedies by the US government in its trial against Google. So yes, not overly surprising there, but just a note.
Yeah, I agree. We'll see how this plays out, but I don't think anything is going to change in the short term, at least.
We will have to bring on, actually, Lauren Wetzel, the CEO of InfoSum, which was just purchased by WPP, and have her talk through, I think, what this future of federated data and using AI rather than IDs in terms of advertising and marketing really means for advertisers going forward.
Yeah, I think
we'll get her on the pod soon.
Yeah, I think that would be a great conversation.
Yep. What else? Google Cloud grew a robust 28%, in contrast to Amazon's 17% ex FX on that second number, albeit off a smaller base. So I think, this, again, we talked about capacity and chips and all of that. Growth is still pretty heady first quarter into 2025.
Yeah, and I think, recurring theme that we're seeing, despite all the uncertainty, the businesses are still pretty strong. So, I think we're beginning to see that. Obviously, this is first quarter results before any tariff effects kick in, but it's just been interesting to note that the commentary has been very similar across the boards.
Yeah, hard to know, man. We are certainly expecting big impacts in some quarters, some sectors, certainly de minimis exemption again kicking in today. It goes back and forth on a daily or hourly or minute by minute basis about relations between the US and China, which is a constant, I think, sort of concern or worry for corporations that exist in this multinational world, and those multinationals really do make up the majority of the largest advertisers globally. So keeps us very busy in terms of trying to suss out what we can learn from the media owners, what we can learn from advertiser commentary. And we'll have some more of that, I think, later in earnings. But because we're so focused on building the forecast right now, it really has been media owners all the time as much as possible. Yeah. Let's go through Microsoft quickly. And I think then maybe we can talk about a couple of the things that we've been seeing and learning from the individual markets where it might be surprising when we talk a lot about the US and Europe, but individual markets often have such idiosyncrasies or fascinating parts about their media and advertising ecosystem that maybe our listeners aren't aware of. We'll come back to that in a second. Microsoft search and news ex-TAC or traffic acquisition costs grew 23%. That was the only segment mentioned as driving revenue increases for Microsoft's more personal computing section of the business in the quarter versus the prior year. So those other segments are gaming and Xbox and Windows OEM and devices. So it's a sign, I think, that the AI upgrades within the devices category aren't necessarily driving sales of physical devices yet in a way that the tech companies were hoping this year. But really, a lot of that growth is coming from advertising within that segment. Although some of the Asia-based OEMs that we heard reporting last year in that computers segment, laptop segment, were still sounding optimistic. So we'll have to see where that nets out later in the year, whether it's the same story across all manufacturers or whether there's variance in terms of who's getting adoption for those new sort of AI upgraded computers. Apple's Mac segment, if we look at their results, by comparison, that was up 7%. iPad revenue was up 15%, although that was a particularly easy comp. Sales were down 17% in the first quarter last year. So I think, growth, but yeah, still to be seen how that works out this year, and especially with imports to the US. For phones, a lot of that was moving out of China and into India. That was a big portion of the news also the last couple of weeks. But less reporting on the Mac and iPad businesses.
Yeah, the phones seem to be getting all the headlines.
Yeah. I mean, it is the largest
Which makes sense,
segment.
right?
Yeah, unsurprisingly. Although
Right.
services is doing its best to catch up, I have to say. That growth, because in their services segment, they have advertising, they have the App Store commissions, there's a bunch of stuff in there, all the subscriptions revenue. That was $26 billion for the first quarter, which was an increase of 12%. So pretty steady growth in that services section. Wearables and home accessories, on the other hand, revenue was down 5%. That's the 7th consecutive quarter of decline. So that includes the earbuds and then the home products.
Yeah, that's interesting to see. I wonder, depending on how things play out with tariffs and the cost of some of these products, if the upgrade cycle just becomes longer and longer as people, want to hang on to their tech, another year.
Yeah. So this is another question we asked our group of experts in our Advertising in 2030 survey. We asked them whether they thought sales of AR glasses, VR headsets, and smart earbuds would overtake smartphone and watch sales by 2030. What would you say? 1 being highly unlikely, 10 being highly likely. What do you
I'm
think? Immersive tech versus screen-based
screen-based.
tech.
Yeah, I'm gonna say they probably came in at a 3.
Yeah, I think that's
Am I
that's pretty close. Yeah.
am I close? All
Zero
right.
0%
Oh,
said
wow,
highly
okay,
likely.
yeah.
Yeah, so no one said 9 to 10.
Right.
83% said unlikely, so
Unlikely,
5 or
yeah.
lower. So you're
Okay,
very much
yeah.
in the majority on that one. Yeah, despite, I think when we're talking about sort of, what was it, 10 million Ray-Ban glasses
Right.
versus the millions and millions of
Of
phones that
phones,
are
right.
released every year. So people don't think that's going to change within a 5-year time span.
Yeah, and I would probably be in that camp as well.
We'll see. We'll see.
Yeah,
A lot can happen in five
that's
years, but
true.
yeah, we'll see. It's been really fun looking through the answers. I'm excited to, have the full results out with the forecast. I think it's going to be a fun look ahead because this is the first time that the this year next year forecast will include 2030 in its outlook. So it felt like a good time to pull that out, dust it off from the shelves, relaunch it, and see how perceptions have changed over the last 5 years.
Yeah, I can't wait to see all the final results.
Yeah. All right. Well, I think that's a wrap for today. There are, plenty of stuff we didn't get a chance to cover. We'll try to catch up with as much as possible next week, but have patience. Oh, we didn't talk about the market stuff. Is there
Sure.
anything that because you're looking after LATAM and Canada right now, is there anything from those
Yeah,
markets that really caught your eye?
it's really fascinating just to kind of see the, a lot of similar trends and a lot of nuances. So I think, for me personally, just getting a little bit more information on a lot of the Latin American markets, just seeing, the strength of TV is still, resilient, but similar trends to what we're seeing in most other countries. And interesting to see in a handful of markets how, good old fashioned physical newspapers are still capturing a little bit of the market, or at least a little higher share than in other parts of the world. So it's fascinating seeing those some of these little differences across across all the different markets.
Yeah, I had quite a few markets across Asia Pacific mention new regulations. We tend to keep pretty good track of the US ones and the EU ones, but there are loads in all these markets that I think don't get big news attention in the US, but which are still really interesting and still impact these big media owners, like Google and Meta that operate in all these markets. So a couple of interesting ones in Japan. The Act on the Limitation of Liability of Internet Service Providers was amended in April. That makes it mandatory for information distribution platform operators to take measures to prevent the distribution of illegal and harmful information. So markets taking various tracks to try and limit, content that is in their mind disruptive, right? And that's going to look different for every market, and it might look different based on which party or person is in power. But there are all these things playing out in all these markets that do impact what we're expecting to see from growth or the different compliance regimes that these companies face in these markets. Philippines, kind of similarly, there has been a lot of attention on social platforms and elections there recently. Fair Election Act apparently limits candidates' airtime on TV and radio and ad space in newspapers. So there have been calls for some kind of regulation on social media spend and or use of influencers as well, because that sits outside of the regulation, and so it's sort of free for all right there right now. And some candidates apparently were using that more so than others. So that's another fascinating one. Taiwan, big use of threads, which I was not aware of or hadn't remembered before reading that again. So it's all these little bits and pieces that we get through that start to color the overall trends and the storyline for this year, next year. And not all of it can make it into the actual end report because there's just so much. But it is hugely fascinating work, I think.
Yeah, it really is. But it is very reassuring to see that sports seems to be the one thing across virtually every market that still drives viewership and cultural moments. So that's been really fun to see in almost every commentary that's been coming back.
Yeah, it's again that thing of collective effervescence, right? People want to feel togetherness in a world where these algorithms and feeds are very personalized and individual. So yeah, hopefully I can watch some baseball this weekend.
Yeah.
That'll be in the cards.
Yeah, it should be a good weekend, and I'm excited to. I have one more episode to go for Black Mirror for the most recent season. So I'll probably be able to finish
Oh,
that off.
yeah. We didn't discuss that. The first episode of this season,
Oh, right.
where
Yeah. Yeah.
definitely listeners go check that out.
Yes.
We won't spoil it,
Right.
but it is
I would.
highly relevant to the
Yeah, as you
advertising
say, if you work
industry.
in advertising, marketing, media, it is a must see.
Yeah, yeah. I had a hard time with that one, I have to admit. I think by the time I'm done with the day where I've spent, 9, 10 hours of just all media advertising all the time, at the end of the night, my current thing is just an old episode of Midsummer Murders, the good British murder mystery television where it's just a sedate English countryside.
Right. That's probably, yeah, like probably not a bad idea at all. For me, it's, just an old episode of like Friends or Seinfeld or
Yeah,
something that's, easy to watch.
yeah, yeah. All right. Well, we'll pick it up again next week. Thank you all for listening. Again, as a reminder, all the commentary from this week, next week is intended for informational and entertainment purposes only and should not be taken as financial advice.